Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Wednesday, June the 6th, 2012. Well, a continuation of the trend to the upside today, and a candle that made another higher high and a higher low. A very large white body candle denoting the buyers being in control of this market all day. They're very keen. They've closed the market a long way above the previous close. They've opened at the low and closed at the high. It's the most bullish type of candle that we can have. It's a white Marubozu candle, and suggests a very large amount of bullishness in this market. So the buyers are very strongly committed to taking this market higher throughout the trading day. The market was also strong enough to take out the area around 1300, and yesterday I suggested that would be an area where the market would trade to, and perhaps we'd see some selling coming in. It was previously strong support, and we know that support and resistance changed their roles, and in this case the market's just blown that area away and traded right up through there. And I think that says something about the solid upside momentum that we have in this market at the moment, and it's an answer to this very bearish activity that we had for the previous week, and a testament to the amount of support and the amount of buying power that we have down around these levels, around 1269 and 1270, that the market could take out that round number resistance, and we had a confluence of resistance around that area. So a very, very strong market in answer to the bearishness for the previous week. In terms of the Fibonacci extension, what we're looking here is the current uptrend compared to the previous time that the trend was the market was trending up, and we're looking at the relationship in terms of Fibonacci ratios, and here today we've seen the market trade right through the 100% level, so quite significant, highlighting the strength in this market. The previous day's trading, we saw the market test right to the 50% level and close there, and there was a possibility that we could have seen a change of trend, but we didn't see any bearishness coming into the market. So this is a good example of how we should be reactive to the Fibonacci levels, and just because a market is at a Fibonacci level, it doesn't mean that it will reverse. We had bullish activity at that Fibonacci level, so even though it was an important level, the sellers showed no strength, and the buyers were in control of the market. And today, once again, we have strength in this market from the buyers, traded all the way through the 100% level. So working off these Fibonacci ratios, there isn't any potential resistance until the market trades to the 161.8% level, which is at 1328. Now that doesn't mean that the market will reverse, but it just highlights that as a potential target for the market to find some resistance, and that coincides with this minor swing low, so that makes that area even more important if we do see continuation of the trend to the upside. So 1328, 1329 is an important level to watch. In terms of the Fibonacci retracement of the previous downtrend, and we saw the market trade through to 23.6% level. We had some targets at 38.2, 50%, 61.8, and the market's taken them all out in a very bullish manner. So I think once again that highlights how strong this market has been for the last couple of days. The next area that we should be looking to is the 78.6, but that's only a minor level, that's at 1320, but then at the 100% level at 1334, and that coincides obviously with this swing high, so that's a level that we should be looking at, and by the way, a previous important area of support and resistance. And here we see, in terms of resistance, this 1333 level that was a previous level and then held fairly recently as resistance. So that's the next target for this market, to trade up potentially to that area and to potentially trade off, or if we see a bullish breakout above, we could see the market trading up to around the 1347 level. We do have resistance offered by the Kijun-sen at 1341, and that will potentially be strong resistance. Down below here, if the market does come off, we should expect solid support at the 1300 level. We've seen that area before in round numbers, even though they've been broken recently in that bullish manner, they still are quite valid as support and resistance levels. In terms of Ichimoku, the market has turned bullish in the short-term time frame now by trading above the Tenkan Sen, the green line here, but we remain bearish in the long-term time frame by trading below the cloud, and in the medium-term time frame by trading below the Kijun Sen. But the Kijun Sen has turned flat, and we are seeing price action attracted back towards there, and that is a possibility that we will see the market continue to trend up and test to higher levels. The Kijun Sen represents equilibrium in the medium-term time frame, and markets move between trending periods and equilibrium periods, and the trending period is when the market stretches away from that Kijun Sen. So now we're reverting back towards the Kijun Sen. Just looking at the Chikou span, that's below the corresponding price action, so it's confirming what we're seeing in the higher time frames, but not confirming this bullishness. So a bearish market in higher time frames, but we're seeing very strong bullish activity in this market. A day where the buyers have taken strong control. The only worry here is have they done too much work all at once in one big effort. Very often markets need to relax when that happens. So we could see some consolidation, perhaps even a test back down to 1300, but it seems as though, based on the Fibonacci levels, that there is more left in this market, and a good target is around this swing high around 1333, 1334.